Okay, let's unpack this. You know how navigating tax rules can feel like a real maze sometimes, especially with things like House Rent Allowance, HRA.
Absolutely. It trips a lot of people up.
Right. So what if there was a clear path? A way to really understand your HRA benefits and see your tax options, like old versus new regime side by side.
That would certainly make things easier.
Well, today, our deep dive is all about finding that exact path.
And what's fascinating, I think, is how a good tool can take all these, complex variables, your salary, rent, city, and just synthesize them.
Synthesize them how?
To give you immediate clarity. You see the numbers, sure, but you also see the impact of different choices you might make.
Immediate clarity. That's the goal.
Yeah.
So our mission today is a deep dive into this online tool, the HRA Allowance and Tax Calculator. It's on smartstudyblog.com.
Right.
And it's built specifically to simplify understanding that HRA exemption and, crucially, compare your total tax under the old and new tax regimes.
Which is key for making informed decisions, obviously.
Exactly. So how do people find it?
It's pretty straightforward. You can just search Smart Study Blog on Google. That usually brings it right up.
Okay, yeah.
Then once you're on the site, look for the tool menu. If you're on mobile, it might be behind those, 3 little dashes.
Hamburger menu, yeah.
Right. Then navigate to Tool, then Tax and GST India, and you'll find the HRA calculator there. On desktop, that tool menu is often right on the homepage. Easier to spot.
Okay, easy enough. So once you're there, using it seems quite intuitive from what I saw. You start by plugging in some key info, right?
Yes. A few essential pieces of data.
First up is the financial year. And you stress this is really important.
Oh, absolutely critical.
Yeah.
Tax rules, the slabs, they can change. So selecting the right FY, say 2024-25 or 2025-26, ensures the whole calculation is, spot on for that specific year.
Right. Get the year wrong, everything else is off. Makes sense.
Exactly. That sets the foundation. Then you put in your annual basic salary.
Okay.
And also any annual Dearness allowance, or DA if you receive it. That's that inflation-linked part of the salary some people get.
Standard stuff, but vital for the math.
Precisely. Next is the total HRA received annually. This is the amount your employer actually paid you as HRA.
Got it. And that's different from the next field, which is?
The actual rent paid annually. And this one's crucial because your HRA exemption, the tax benefit, it's directly linked to the rent you actually pay.
So no rent paid, no HRA exemption, even if your employer gives you HRA.
That's fundamentally correct. You need to have actually incurred rent expenses.
Okay. Then there's city type. That sounds important.
It is. It makes a significant difference. You choose metro if you're in Delhi, Mumbai, Chennai, or Kolkata.
The big four.
Right. For those cities, the HRA exemption calculation uses a higher limit, 50% of your salary, meaning basic plus DA.
And if you're not in one of those?
Then you select non-metro. That covers all other cities, and the limit used in the calculation is lower at 40% of basic plus DA.
Okay, so that directly impacts the potential exemption amount.
Directly. And finally, you add any income from other sources annually. This could be, bank interest, maybe some freelance income, whatever.
Right, captures the whole picture. Once all that's in, you hit calculate.
You hit calculate, and that's where the magic happens, so to speak. The tool processes everything.
And what does the output look like? This is the aha moment.
It really is. First, you see the HRA exemption breakdown. The tool clearly shows your exempted HRA, the part you don't pay tax on, and therefore your taxable HRA.
How does it figure out the exempted part? Isn't that complex?
It is, but the tool does it instantly. It calculates the exemption based on the least of 3 specific amounts.
Okay, what are the 3?
1, the actual HRA you receive from your employer. 2, that 50% or 40% of your salary plus DA, depending on your city type.
Metro or non-metro, right?
Yes. And 3, the amount of rent you actually paid minus 10% of your salary plus DA.
Wow, okay. So it's the lowest of those 3 figures that becomes your actual exemption.
Exactly. Understanding that least of rule is really the key to HRA. The tool just shows it to you without you needing to calculate each one manually.
That alone seems worth it. But then it does the tax regime comparison.
Yes, and this is incredibly useful. It shows your tax liability calculated side by side for both the old and the new tax regimes.
Okay, so walk us through that, the old regime side first.
Sure. For the old regime, it takes your gross income, subtracts the HRA exemption we just discussed, applies the standard deduction, and potentially other deductions if the tool included them, to get your net taxable income.
Right.
Then it calculates the tax based on the old slab rates. It also figures in any Section 87A rebate you might be eligible for. That's a small tax credit.
Lower incomes, yeah.
Correct. And finally, it adds the 4% health and education cess on top of the calculated tax.
Okay, that's the old regime calculation and the new regime side.
The new regime calculation is presented right next to it. Now remember, the new regime generally offers lower slab rates.
With fewer exemptions, that's the catch.
That's the big one. HRA exemption typically doesn't apply under the new regime. So the tool applies the standard deduction allowed under the new regime, calculates tax using the new slab rates.
Which are different from the old ones.
Yes, different rates, different thresholds. It also applies the relevant Section 87A rebate and the 4% cess, just like the old one.
So you see two final tax numbers side by side, old versus new.
Precisely. And the tool often highlights which one results in lower tax for you, based on the inputs you provided. It really reveals your personal tipping point.
That tipping point idea is interesting. Because it's not always obvious which is better, right?
Not at all. For some people, especially those with high rent in metro cities benefiting significantly from HRA, the old regime might still be better, despite higher slab rates. For others, the simplicity and lower rates of the new regime win out.
So this tool helps you see why one is better for your specific situation.
Exactly. It takes away the guesswork and the, frankly, complex manual calculations.
So wrapping this up then, what does this all really mean for you, the listener? This calculator seems to genuinely simplify a tricky process.
It does. It helps you maximize that HRA benefit by understanding the calculation, and crucially, lets you see clearly which tax regime saves you more money.
Based on your actual income, your actual rent. It makes the decision informed, not just a guess.
Absolutely. It puts the power of comparison right in your hands.
Which leads to a final thought, maybe something to mull over. This tool is clearly more than just a calculator, right? It's like a window into more proactive tax planning. So the question is, how might using precise tools like this, maybe for other financial areas too, transform your whole approach to financial well-being? Not just during tax season, but all year round, empowering smarter choices.
That's a great question. Moving beyond just compliance towards actual financial optimization using accessible tech, it's something worth considering.